Hi, this is Ed Crowe. Thanks for joining me today. I wanted to go over the proposed rule from CMS that would make changes to agent and broker compensation for 2025. This presentation is very short. It's only 5 slides. I will have it done in less than 10 minutes. So just give you a quick run through. It's fairly straightforward. We've learned that over the last couple of years, there's been a lot of change in our business for sure when it comes to compliance and scopes and recording calls and various things, and this is basically a continuation of that. This one is fairly substantial in some areas, so I wanted to review it and go through it. So the proposed rule is by CMS. They've proposed a rule that will go in final form in January. So they propose it. If there's any changes to it, we'll see what the final version in January looks like. And then once it goes into its final version, it would then be enacted 1/1/2025. Essentially, though, it would start, even though it's effective for 1/1/25, essentially starts October 1st. And this proposed rule is CMS-4205-P. And it addresses a lot of issues. It's a big document. It's 486 pages, but what I'm going to focus on specifically is agent compensation adjustments. And it's specific to agent compensation, but obviously it has an effect on agents, agencies, and top of hierarchy organizations as well. So I'll try to break down how much it impacts all three and go from there. So we'll talk about the agent compensation adjustment. What it looks to do is it will take the national commission, max allowable commission level, and make that the level for all agents. And again, there's debate on this. When you read the document, it can kind of be interpreted a couple ways, so I'll give you both. But essentially that would say agents would be paid at the national level, which is $611 and $306 for 2024. They would add a $31 additional amount to that to cover admin expenses. Now the question comes, what about the other states that are in the higher max commission brackets? So specifically California and New Jersey, right now they're $762 and $381 for 2024. And Connecticut, Pennsylvania, and DC are $689 and $345 for 2024. Again, there's been debate. Is this proposal saying that all states will be $611 and $306? Well, with that $31 added to it. Or are they saying that the national stay the same, and then the two other brackets, California and New Jersey, Connecticut, PA, and DC, will stay at their levels and they'll add the $31 to that? Not sure at this point. When you read it, it can be interpreted both ways, but I guess time will tell on that one. This proposal in final version, if it stays the same, will have a much bigger impact on some organizations, some agencies than others. It'll certainly have an impact on individual agents as well. But one thing I'd like to say before I get any further into this, even if it goes in its proposed form into the final form without any changes, Medicare can still be a profitable, viable business for individual agents and some agencies. Yes, it will create some challenges for them and some revenue challenges, but it's still a good business. So I wanted to start there. Okay, so we talked about the commissions. Let's hit the overrides and admin fee part, and this is the big part. So the proposal looks to eliminate all admin fees and all overrides at all levels. That means a general agency all the way up to an NMO. So basically agencies of any level would lose the overrides. So a huge impact here would be agencies that have direct pay agents, meaning they have agents underneath them, they provide services and support to, but those agents are paid direct by the carrier, the full max allowable commission, and that agency's revenue source all the way up to an NMO, their revenue source is simply the overrides when it comes to Medicare. If this proposal goes into effect, the final form that goes into effect is the proposed form, it would essentially end that model. Because if you have an upline and your agents are getting, or agents and agencies are getting paid direct, the max commission, and your revenue source is the overrides, and those overrides go away, well, it's hard to do business then. So with that, if that were the case, and you were an agent who was working with an agency or all the way up to an NMO, the services they provide would go away as well. And that can be different things to different people. It depends on how much an agent is utilizing services from their agency or FMO or NMO, and also depends on what kind of services are being provided to them or offered to them. So essentially, I try to hit some of the bigger things that we see that are more common being offered from uplines to agents. Things like Connector and Sunfire. We certainly, I know my office is an example, have a lot of agents that use Connector or Sunfire because they can quote, compare, they can save all the drug information, the doctor info, and they can enroll from those platforms. For example, my office, every client we have is loaded into Sunfire with their drug information. So when they call, it's easy to see which plan comes out the best for them and make a switch for them quickly. Those platforms are expensive and most likely wouldn't be available to agents if this were to go through. Contracting, that's an interesting one. Right now, and I don't know the number, but there's a substantial amount of agents that get their contracting through an upline, an agent, or an agency. So if the agency or upline wasn't there to process that contracting for them, essentially then what we would have is the contracting would have to be done directly through the carriers on an agent level. I have to think that would cause delays. I won't speak for the carriers, they would know better than I, but we run at delays right now as it is, so I have to think that that might be an issue. Education and training provided. I know my office answers a lot of calls every day to answer basic questions on Medicare rules, SEPs, various things. If we're not around to do that, I assume then the agents would have to use the carriers for that as well. Marketing reimbursements, so maybe from your upline, an agent gets expense reimbursements for leads, for marketing, for basically other expenses associated with writing business. And then anything else you might access from an agency or an FMO or NMO. Really clear in the proposal that any kind of marketing money towards expenses or lead cost will not be allowed. So it won't be allowed at any level. That means marketing or expense reimbursements from uplines, agencies, FMOs, and marketing money from carriers. It eliminates that. So of course, at the agent level, that would be a challenge. For some of you who, or some of us rather, who utilize expense reimbursements. It would also remove fees for HRAs. So you would no longer be able to be paid a fee for completing an HRA. So this will create challenges certainly in well, maybe make access to certain things not available anymore, but it wouldn't eliminate all agency models. The agency model that could still work under this system would be the LOA agency. So an LOA agency, for those who don't know, it's an agency that instead of the carriers paying their sub-agents or employees directly, they pay the agency, and then the agency pays the sub-agents or employees. And usually they pay them below the CMS max. In return for something of value, they provide or multiple things of value. Maybe they provide office space, maybe they have a sales platform, great lead program, or it could be a variety of things that they're offering. So that model would still work. There'd be challenges to it, of course, because most LOA agencies receive overrides. So that helps increase the revenue. So those overrides, if they went away, would create a challenge in that regard. And also if they couldn't get reimbursed for expenses, it might make it more difficult, but it still could be a viable, profitable business. Other agencies maybe that wouldn't be affected as much would be agencies that sell high volumes of ancillary products. So maybe you have agencies that, yes, their people sell Medicare. However, a lot of their volume and a lot of their revenue is based on ancillary sales like cancer plans, critical illness, annuities, life insurance, those types of things. They wouldn't take as big of a revenue hit, and maybe that would still work for them. And then agencies or FMOs that their main revenue source is just from other products in the first place. You know, they're essentially annuities first, or maybe they're an RIA firm or a life insurance firm, and they kind of do Medicare on the side. Yeah, they'll lose revenue on the Medicare piece, but if their main revenue is from other products, then they should be okay. So what are the timelines for this? And when can you send in? Can you send in comments if you want? Yes, you can. I mean, the timeline is this: the rules currently proposed. It came out about 2 weeks ago. You can submit comments until January 5th. A final decision, we believe, will be made sometime in January. If you want to send comments to CMS, you can do this specific to this proposed rule. We're going to email out a link that shows a link you can click on to submit comments, and again, they'll be tied right specifically to this proposal. And I just want to make quick mention of NABIP on this. NABIP is a big advocate for us as agents and agencies, both. And they have a link to a brief survey. It's a 5-question survey. They're trying to gather up information so they have data and they can make a case on our behalf, whatever that may be. So let's wrap it up. Basically, if the current version of the proposed rule becomes final, obviously it's going to create substantial change in Medicare distribution in general. I mean, there are a lot of agents, a high percentage of agents that are underneath either an agency or an upline, receive services, contracting, various things I already discussed from that upline. So that model potentially would change a great deal. If you want to send comments in, like I said, you have till January 5th. If you want to see this entire proposal, you can go to regulations.gov. And when you go on regulations.gov, there's a search bar. And the way to find this proposal is to simply type in CMS-4205-P. You got to put the hyphens in there or it won't come up. So anyway, when you put that in there and search, the entire 486-page document can be downloaded. And that way you can look at all of it. You can make comments, send in comments if you'd like as well. The part of the documents that are specific to the things I've been talking about, to agent and broker compensation, overrides, HRAs, that kind of thing, can be found on pages 6 and then pages 236 through 248. One last thing, very important if you're going to send comments in, keep in mind these comments are public record. So whatever comments you do send in, be professional and constructive. Maybe you want to explain the services you provide to clients. And if you feel it's the case, how the loss of services you receive from your agency or upline might inhibit your ability to service your clients. So you can send comments in. Like I said, this is a big change. But again, I want to reiterate, it's a big change, and it's certainly at the agent level and the LOA agency level, it will make things, there'll be challenges, it'll make things difficult. But I still feel it's a viable business and can be a profitable business, just maybe a little more challenging than it is currently. That's all I have today. I appreciate you joining me. Like I said, we'll send out emails, and hopefully I'll see a bunch of you on the Zoom call on the same topic tomorrow. Thank you.